We at Great Lakes Hybrids have been serving generations of farmers with outstanding service, the latest technology, and new yield producing proprietary genetics. We're happy to partner with Farms.com Risk Management to bring you this latest market update.
Welcome to the Farms.com Risk Management Daily Market Commentary for November 30th, 2011. This is Mo Agostino, Managing Commodity Strategist with Farms.com Risk Management. Well, today, promised you that daily about the potential Santa Claus rally, year-end rally, and that's our title, so let's go right into it. Well, Wall Street is famous for cliches. In other words, investors will tend to follow certain patterns. They're known as the January effect, sell in May and go away. There's the window dressing, and of course there's also the Santa Claus rally. It's not really based on fundamental news. It could be based on superstitious coincidence or a calendar event. So let's get into it. January effect up 8.7%. So if an investor followed some of these cliches in 2011, they would have worked quite well. Sell in May, go away. The market actually fell 7.1% shortly after May. However, we did test again the highs in July, and of course went to new lows here through the month of September. October was also a very good month, up 10% after a slight sell-off there at the end of October. And of course, we're now into almost December, and who knows what's going to happen there. So our question is, will we get that Santa Claus rally? Will we get that year-end rally? Well, our timing's pretty good today. We got central banks across the globe, which includes the European Central Bank, Bank of Canada, U.S. Federal Reserve, Switzerland, and the Bank of England providing more liquidity to the financial global system, particularly the banks in Europe, so that Europe can avoid default. This is the assurance that the markets needed. So it's caused the Dow Jones to surge over 400 points. We needed the European Central Bank, and I know you hate me talking about printing money again, but in 2008, the U.S. Federal Reserve provided liquidity to the U.S. economy that caused us to move out of recession, and I think that's what we need here. We need the European Central Bank to commit to fixing this, solving the problem by printing more money, and I think this is the first step down that right road. So why do we think there's going to be a Santa Claus rally? Well, we got this breaking news this morning. We also got the China announcing that they're going to lower their banking reserve requirements, providing more liquidity to the system again. That's first time in 3 years. That signals that perhaps their economy is doing quite well, that inflation's under control. We also have better economic news. We got better jobs in the United States, better retail sales from Black Friday, that the potential for the U.S. economy to continue to rebound. Economic data showing maybe a 3-4% growth rate in fourth quarter. Canada's economy grew by 3.5% in third quarter. So let's see what happened last year. These are all catalysts that could cause this Santa Claus rally. Last year and even in 2009. You can see from the chart, the Dow Jones was up slightly, 5.4% in 2010. Corn was up 24.3%. Soybeans up 17, Chicago wheat up 27, Minneapolis up 23, canola up 11, oats up 14, western barley up 7, hogs up 16, and live cattle up 7%. So the last couple years, obviously 2010 was a little bit better than 2009 coming off of that 2008 recession, but good chance that we could see a 7 to 10% rally here in the coming weeks. I think the market may end up selling some of these rallies, and the closing price is going to be the most important. It looks like we did close higher on most of the grains, and some of and mostly the live cattle, feeder cattle, a little bit mixed on the hogs, but overall not a bad day. It's the third consecutive higher close for corn, which bodes well. Moving forward, maybe we've reversed that downtrend. In other news, we got 364 items in the 12 days of Christmas, costing you a lot more money. Actually, it's a record high, over $100,000 now. We got Goldman Sachs predicting that a basket of 24 commodities next year, 2012, will actually be up about 15%. So far this year, they're up about 2%. Got Japan confirming its 8th case of VSC, or mad cow disease. They're saying it could be a different strain, so that could impact their exports into Australia. They're a big exporter to Australia. And then we got the Canadian economy growing at 3.5%, better than what analysts or economists were looking for at 3.0%. And then finally, the ministers in Europe have agreed to postpone detailed plans of providing more firepower for the rescue fund till December 9th, so it's do or die. But I think these leaders will give the markets what Europe needs. Until next time, thanks for watching. I'm going to keep you posted on this Santa Claus rally. I'm not going to say Merry Christmas just yet, but hopefully I will provide you with some better returns in the coming 30 days. Take care.